Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call of Jupiter Wagons Limited. As a reminder, all participant lines will be in the listen only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prathamesh Kamant from Systematic Group. Thank you and over to you, sir.
Thank you, and good afternoon, everyone. Thanks for joining us today for the Q1 FY26 earnings call of Jupiter Wagons Limited. On behalf of Systematics, I would like to thank the management for giving us the opportunity to host this call. Today, we have with us Mr. Vivek Lohia, Managing Director, and Mr. Ritesh Kumar Singh, Company Secretary. Now, I would like to hand over the call to the management for their opening remarks, and then we can open for Q&A. Thank you, and over to you, Vivek, sir.
Thank you, Prathamesh. Good afternoon, everyone. Thank you for joining the call to discuss our performance for the first quarter ended June 30th, 2025. During the first quarter, we faced challenges from continued short supply of wheel sets from Indian Railways. This has resulted in suboptimal plant utilization and consequently production volumes during the quarter were substantially down. However, all other business segments and verticals have reported stable to increasing volumes. As a result of the reduced volume of wagons on a standalone basis, Jupiter Wagons reported a total income of 425 crores for Q1 FY26 compared to 902 crores in Q1 FY25, making a 53% decline. EBITDA stood at 51 crore while profit after tax was rupees 33 crores. On a consolidated basis, total income reached 476 crores with EBITDA at 60 crores and PAT at 31 crores. The supply of wheel sets has since got normalized and the company expects to recover lost production in the coming quarters. Even with these temporary challenges, our core railway business and emerging verticals continue to demonstrate resilience, supported by strong fundamental and consistent strategic execution. A key highlight for this quarter has been the progress of Jupiter Electric Mobility, with production and sales having commenced. In June, we opened our first dedicated showroom in Bangalore, marking the start of our national retail footprint. We plan to open another 4 to 6 showrooms by September 2025. We have recently reached significant milestone of having completed dispatch of 50 vehicles and are looking to accelerate the production and deliveries. Further strengthening this effort, we signed MOU with Pickup, a fast-growing logistics platform, to deploy 300 GEM Tej vehicles by the end of the year. This partnership, aligned with the Government of India's PM E-Drive initiative, reflects our ambition to accelerate EV production in the logistics ecosystem and support India's broader clean mobility goals through real-world scalable applications. With commercial EV demand rising sharply, projected to grow at a CAGR of over 40% through FY30, driven by last mile and urban freight applications, this initiative strategically positions us in a high-growth, policy-supported sector. Our battery division is generating 100% month-on-month growth. We have commenced supply to Siemens for Vande Bharat and other products have gone into development for other railway applications. GEM has developed BESS systems for solar and mobile BESS applications right from battery to container and irrigation. We already have early orders for some domestic customers and export orders for Africa for renewable applications. In the first phase, we are targeting DG replacement, energy shifting, for peak demand usage, for industrial and mobile BESS, for off-grid applications, with the technology developed internally, of which we already have pilot orders in hand from multiple well-known channels. The DG market in India is approximately 10,000 crores annually, which we feel will shift in one to two our backup segments to BESS. All the limitations being put on net metering will further create opportunities in solar plus BESS markets in this segment. In the second phase, we are looking on utility scale BESS for increasing market in India, which is foreseen to be growing to 10 gigawatts of annual volume with approximately rupees 8,000 to 10,000 crores coming out via utility players with delivery timelines of 2 years approximately. Currently, everything is getting imported and assembled systems from China, and we foresee with our battery and container joint capabilities to be well placed strategically to be a leading integrated manufacturing player in India. To support the above two, we are installing and commissioning our battery module line in Indore in late September, besides our already established Bangalore facility. In the wheel set business, we are witnessing quarter-on-quarter growth from Aurangabad unit, and with capacity enhancement underway, we expect to achieve revenue of approximately 550 crores in the current financial year, which would further increase to around 1,000 crores next year. Regarding our wheel and axle project at Orissa, we have finalized procurement of all critical equipment and construction contracts. Work has commenced at the site and is progressing as per planned schedule. With the planned investment of rupees 2,500 crore in phases, the facility will boost domestic manufacturing and support export capabilities. We are also implementing smart automation, including robotic welding, advanced NDT systems, and real-time process analytics to ensure higher productivity and reliability across all our facilities. In terms of financial credibility, we are pleased to receive an upgrade in our long-term credit rating from acute of AA with stable outlook, which reflects a strong balance sheet and prudent capital management. Our confirmed order book stood at rupees 5,972 crores, offering continued visibility for the coming quarters. Looking ahead, our focus remains on disciplined execution, market diversification, and innovation across rail and mobility segments. The Indian logistics sector is expected to grow to $500 billion by 2030, with rail's modal share targeted to increase from current 27% to 40% under Gati Shakti. This structural shift represents a major opportunity for integrated solution providers like Jupiter Wagons. With a healthy order pipeline, expanded product capabilities, and strong macro tailwinds in infrastructure and clean mobility, Jupiter Wagons is well positioned to deliver sustainable growth and value creation over the long term. We thank all our stakeholders for their continued trust and support. On that note, I would like to request the moderator to open the forum for any questions or suggestions you may have. Thank you.
Thank you. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sahil Patani from Strokes Capital. Please go ahead.
Hi, thanks for the opportunity. Two-part question. So I think in the previous Concall we had given a full year guidance of about 10 to 15% top line growth. with EBITDA margins in the range of 14 to 15%. So want to understand if we'll still be able to meet that kind of a projection, because our margins have kind of contracted this quarter. So if you could just provide some more highlights around that.
Thank you. So we still maintain our guidelines, and we expect, as I've already mentioned, that July onwards the wheel supplies have stabilized. So we expect that in the last 2 quarters we'll make up a lot of the lost grounds which we had in the first quarter. If you see that our overall margin per wagon sold has improved because we are supplying more on the private side now than to the railways. So we don't see any challenges in terms of maintaining EBITDA margins. And also, as I mentioned in my call, that the other business segments are now showing substantial revenues. So especially the wheel business, so that will also have an impact on both the revenues as well as the bottom line. So I don't see a challenge in terms of maintaining the margins. This time there was a contraction in the margins just on account of the reduced revenue. Otherwise, the overall margin per wagon, there has been an increase, there has not been a decline. So as soon as the numbers catch up, you will find increase in margins.
Understood. Thank you. That helps. And my second question is, in terms of the order book and the order pipeline, are you seeing any more orders coming in from the Indian Railways? Like, what's the outlook looking like? Because I recall in the previous Concall you had mentioned that we should see some more interest, some more order bid pipelines coming in over the next few months. So just wanted to get a broader picture on that.
So, from the private sector, we continue to receive sizable orders. We recently announced the orders which we received from GATX. So there we see a continued pipeline. On the Indian Railway side, as I mentioned earlier, also in the third, fourth quarter, we expect railways to come up with new tenders because still there is a lot of previous supplies which are pending with Indian Railways. And so we expect definitely tenders, substantial tenders should be coming in the third or the fourth quarter from the railways.
Okay, so we are expecting them to come in over the next couple of quarters?
Yes, that is the expectation given the the way the demand and the growth in the sector is shaping up.
Okay. That's all from me. Thank you and good luck.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question is from the line of Akash from Dalal and Brocha. Please go ahead. Hello.
Yeah, thanks for the opportunity. Yeah. So I have 2-3 questions. Firstly, Vivek sir, what are the total wagons in our order book currently?
Just hold on, I will answer that. The total number of wagons is approximately about 4,700.
4,700. Okay.
Sorry, mistaken. Total number of wagons is approximately 11,500.
11,500. Okay. And so the order book that we have reported of 5,900 approx, that does not, it includes the 242 crore also order that we received recently?
It includes the 242 crore orders.
Okay, sir. And sir, since we are saying that we are holding on to a guidance of almost around 10,000 wagons by the year end, so that probably works out to almost from Q2 onwards, almost it has to work out to around 1,000 wagons per month. I don't think we have operated at that scale earlier. So, sir, do we have the capacity in our foundry and our plant to be able to run at that scale, at that pace?
No, we definitely have the capacity to go up to that scale. So, and our target, as I've told you, our target this year was to scale up production, and we are already focused on that. The challenge is that the supply of wheel sets from Indian Railway has not been at par with our internal targets. But as I've told you, from July onwards, things have improved, and we expect them to improve further. So as the wheel supplies improve, you will see that we are closer to achieving our targets.
So, sir, will we be able to do more wagons than we did last year? Do you have that positive view sitting today?
Definitely, that is what we are striving towards, to achieve a higher growth rate compared to last year. And we have been supporting by our own production itself, because though most of our production goes towards our own private requirement and requirement of others, but even during the last quarter, we have used more than 4,000 wheel sets from our own capacities to support our railway supplies. So, with I think if from the railway side, if the supplies improve, I don't see a challenge why we should not surpass last year's numbers.
Understood. And sir, if you could, since we are doing a lot of capex of almost around 2,500 crore, and we also have debt on our books, just wanted, what are our internal estimates of the total interest cost, that is finance cost, and total depreciation that we'll be having on our books for FY 26 and 27? Ballpark estimates will do, sir.
See, as of right now, if you look, we are still a net debt free company. So this in FY 26, you will have no major impact. See, most of the capex expenditure will happen in FY 27. And which will interest is going to get capitalized, because the repayment starts 2 years from start of production. So the impact will be much later on. So immediately in the next 2 financial years, you will not see any kind of impact in terms of the 2,500, the debt which we'll be taking towards the new expansion.
So, sir, the interest and depreciation level will remain more or less similar to FY 25 level? Is it what you mean?
So the depreciation would slightly go up, but interest would be, I wouldn't see, in both cases, you will not find any substantial kind of changes from last year.
Understood. And sir, last 2 questions from my side. Firstly, on the ELCVs that we do. So how many ELCVs that we sold in Q1, and how has the response been at the new dealer showroom that we have opened? And secondly, want to understand on the brake systems part. I mean, I think we have reported around 9 brake systems that we have manufactured this quarter. So I think now that Stone India and all of them are fully operational, why doesn't this part of our business grow as fast, is what I'm trying to understand. Yeah, that's it.
In terms of the ELCV, we started supplies from June onwards. As I mentioned that we have already supplied more than 50 vehicles. We expect in the next 2 months further dealerships to open. So by September end, we expect at least 6 dealerships across the country. We are now already in the process of getting all the financial tie-ups with all the major NBFCs as well as the banking institutions. So we expect the growth numbers to be very strong on the ELCV side. And plus we are, as I mentioned earlier also, we are in the process of launching 2 other vehicles, a 2-ton payload vehicle as well as in the 1-ton segment another vehicle in the current financial year itself. So, with all these developments and with a strong dealer network, we expect the numbers to be very strong this year.
So, sir, in the first month itself, you have sold 50, is it? You started in June?
June, yes. The supply started in June.
Okay. And if you could just clarify on the brake systems part.
So on the brake system, including our the Covis JV as well as the Daco JV, this year we should do a business of more than 250 crores, as I mentioned earlier. So because the way the tenders were on the brake systems, the way the tenders were placed is that the supplies are going to be starting from next quarter onwards, because most of our supplies are skewed towards end of the year. So that's how the tenders were put. On the brake disc, we have been supplying the brake disc regularly. On Stone India, as I mentioned earlier also, we are still the final certifications are ongoing, and we expect production to start in the last quarter of this financial year.
Okay. Got it, sir. But what kind of margins will do on the brake side? Yeah, I'll come back in the queue. Yeah, that's fine.
Join the queue. Thank you. Our next question is from the line of Senthil Kumar from Joindra Capital Services Limited. Please go ahead. Hello. Senthil, sir? As there is no response from the current participant, our next question is from the line of Rajesh Bhandari from Nakoda Engineers. Please go ahead.
Hello. Good afternoon and namaskar, sir.
Yeah, good afternoon, Mr. Bhandari.
हाँ सर, ये इसमें मैं देख रहा था कि अपना जो इस मंथ क्वार्टर का जो टर्नओवर है दैट्स अप्रोक्सीमेटली 470 करोड़, जिसमें करीब 240 करोड़ के आसपास तो वैगन का है और अप्रोक्सीमेटली 100 करोड़ के आसपास शायद व्हील का है. बाकी सारे आइटम जो है वो 130 करोड़ के अंदर हैं. और आपने ऑपरेटिंग हाईलाइट में दिखाया है रेलवे वैगन 826 एंड दैट व्हील सेट ऑल्सो 4811. तो ये क्या क्वांटिटीज हैं सर जो Q1 में मैन्युफैक्चर किया था?
हाँ, ये जो आप देख रहे हैं ये क्वांटिटीज है जो हमने सेल्स क्वांटिटी है, जितना हमने सप्लाई किया है वो क्वांटिटीज है.
हाँ, जो सप्लाई किया है, जो टर्नओवर में आया है.
हाँ.
तो इसके अलावा ये दो आइटम वैगन और व्हील्स के अलावा बाकी दूसरे आइटम तो बहुत ही लो वैल्यू हो जाते हैं सर.
देखिए
तो
बाकी जितने
बाकी
बिजनेसेस हैं वो अगर आप व्हील ये दो हटा दे तो बाकी जो कंपोनेंट्स हैं वो इसके अलावा मेन जो रह जाता है वो ब्रेक सिस्टम्स ही रह जाता है. जैसे हमने कहा है कि ब्रेक सिस्टम्स का लास्ट क्वार्टर से आप अर्निंग्स रिफ्लेक्ट होने चालू होंगे, तो वो आपको बाय फोर्थ क्वार्टर यू विल सी दैट ब्रेक सिस्टम के जो रेवेन्यू कॉन्ट्रीब्यूशंस है वो सिग्निफिकेंटली बढ़ रहे हैं.
जी. बट वैल्यू नॉर्मली जैसे हाई वैल्यू में अगर जैसे मान लीजिए मेट्रो कार अपन बनाना शुरू करें या डबल डेकर वैगन लोडर्स
हम बनाना स्टार्ट किए, बट वो पार्ट ऑफ वैगन के रेवेन्यूज में ही कैप्चर हो जा रहे हैं.
हाँ, डबल डेकर व्हाट आई मीन टू से इज नॉट ओपन टाइप, क्लोज टाइप.
Close type we are already making. We have a substantial order book, but that is part of our wagon revenues. तो वो वैगन already included है.
ये मेट्रो कार या नव भारत या वंदे भारत कार वगैरह कुछ सोच रहे हैं सर अपन प्लान में?
अभी इमीडिएटली तो हमारे प्लान में नहीं है, बट आगे जाकर डेफिनेटली इट इज समथिंग विच वी मे कंसिडर.
तो अपना FY 26 एंड 27 एंड 28 क्या एक्सपेक्टेड टर्नओवर हो सकता है सर?
देखिए इतना
एक्सपेक्टेड,
जैसे मैंने आगे कहा है कि व्हील बिजनेस काफी सिग्निफिकेंट उस समय हो जाएगा. नेक्स्ट ईयर जो हमारा प्रोजेक्ट है कि करीब 1000 करोड़ की रेवेन्यू व्हील से आएगी, और उसके बाद जब हमारा उड़ीसा facility next year end तक उड़ीसा facility should be online. So from FY 27-28, if you look at FY 27-28, I think wheels should be close to about 3,000 crores in terms of revenue. So that would be significant, as significant as the wagon revenues, और उसमें export also would be quite substantial. Then we expect in the next 2 to 3 years जो हमारा जो vehicle business है, जो अभी हमने just start, as well as the battery business, that should be a significant business. So that we are expecting that business to be upward of anything between a 500 to 1,000 crore business for us by that time.
मतलब battery itself 500 to 1,000 and vehicle also 500 to 1,000.
Battery and vehicle included, the whole that entire segment would be anything between 500 to 1,000 crores.
Okay, and the value addition is better here. Margins also better.
Yes, definitely. In the especially on the battery side, we are seeing month on month we are seeing about more than 100% growth, and even the margins on the battery side is very very strong for us.
सर मेरा एक क्वेश्चन और है, अभी जैसे व्हील में आपने बताया कि बाय FY 27-28 3,000 करोड़ का एक्सपेक्टेड है, और अभी वैसे हर कोई जो है ऑल द टैक्स में को हुआ, आपका टीटागढ़ हुआ, आपका जुपिटर हुआ, एवरीबडी वाज सफरिंग बिकॉज ऑफ द व्हील सप्लाई, और हर एक कोई अपना व्हील मैन्युफैक्चरिंग का प्रोसेस चालू कर रहा है जो अगले साल तक पूरा फुल फ्लेजेड हो जाएगा. तो कहीं ऐसा तो नहीं है सर जैसे सेमीकंडक्टर चिप में हुआ कि अभी मार्केट ओवर हो गया तो व्हील सप्लाई भी बहुत ज़्यादा हो जाएगी, या इंटरनेशनल मार्केट में भी चलेगा?
नहीं, इसमें एक तो सिर्फ आई थिंक एक टीटागढ़ का एक प्रोजेक्ट आ रहा है और एक हमारा आ रहा है, और टीटागढ़ के प्रोजेक्ट में उनका इंटीग्रेटेड प्लांट नहीं है क्योंकि वो सिर्फ व्हील लाइन लगा रहे हैं, वो एक्सल लाइन नहीं लगा रहे हैं.
ओह अच्छा, आपका इंटीग्रेटेड है? हाँ,
इंटीग्रेटेड है, एंड वी हैव अ पार्टनर इन यूरोप हु देमसेल्व्स उनका व्हील कंजम्पशन काफी ज्यादा है, वो करीब 50,000 व्हील सेट कंज्यूम करते हैं साल का.
Oh, and one wheel set would be around approximately 4 lakhs, approximately
3 to 4 lakhs depending upon
जी
the
हाँ
type
जी
of...
हाँ जी हाँ जी हाँ जी हाँ. नहीं चलिए अच्छा है सर, अगर ये हो. हाँ या थैंक यू थैंक यू थैंक यू थैंक यू सर. या थैंक यू.
Thank you. A reminder to all participants, anyone who wishes to ask a question may press star and one on their touchtone telephone. I repeat, anyone who wishes to ask a question may press star and one on their touchtone telephone. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Next question is from the line of Vasudev from Nuvama. Please go ahead.
Yeah, thank you for the opportunity. So, sir, since we had this issue regarding wheel set availability, so was there an option open for us to import from China?
Yeah, so see, for the private supplies which we do, we have enough capacity, and now for the railway orders, Indian Railway does not permit us to use wheel sets because they are, as per the contract, they are supposed to supply the wheel sets, and there is also a pricing differential from the Chinese prices and the Indian prices. So for the railway contracts, we have to depend upon Indian Railways. However, for our own, for the private demand, we have enough capacity, and that's not a challenge. It's the challenge is on the railway side, which I think now Indian Railways is assuring us that henceforth things will be much better.
Okay, because I think in Q4 government had allowed us to import from China for the railway orders as well. So I was just
that was, you're right, but those were for limited quantities, and as I've told you, the price differential is also substantial, and they are not reimbursing for the price difference. So it does not even make financial sense for us to import and use those wheels.
Yeah, so that is helpful. And sir, just a bookkeeping related question. Can you give the split between private wagons and the, order book split between private and Indian Railways? And also, what is our gross debt and net debt by the end of the quarter?
Just in terms of the split, I think Indian Railway order book is right now close to about 4,000 and private is about 7,000 for us. And the split, the borrowing right now is around 496 crores and the cash is about 426 crores.
Okay, sure. So that's it from my side. Thank you.
Thank you. Our next question is from the line of Hardik Gandhi from HPMG Shares and Securities Limited. Please go ahead.
Hello, sir. Thank you for the opportunity. Am I audible?
Yes, you are audible.
Yes, sir, you're audible.
Yeah. So just wanted to know a few things on the battery side, that there are a lot of people who are coming into battery manufacturing. A lot of people have purchased the technology from US or China or somewhere else, and in our case, we've developed it indigenously. So just wanting to know on the competitive front, what does the landscape look like? Just wanted to know some insights from you.
So, first, the market is the growth in the market is going to be quite substantial. As I mentioned, that just on the BESS side, the overall demand is going to be close to 10 gigawatts. That's on the BESS. If you look at the overall market, the demand is going to be quite substantial. So, and India right now has very little capacity. If you look at the Indian market, more than 80% of our requirements right now we are importing it from China. So there is enough opportunity for other players to grow. However, that we have a very, very strong ecosystem because we are one of the most integrated players right now because we are besides cell, I think most of the other processes which go into manufacturing of batteries is all in-house. On the BESS side for us, even the containers we are manufacturing in-house, and we are working with all the major global clients today. If you look at our portfolio, we have clients like General Electric, we have clients like Delta, we have Mitsubishi with us, and just to name a few, we have people like Schneider on our portfolio. We have and we are in terms of technology, I think we are far ahead on the curve. As I mentioned that we have already started supplying the BESS systems, and now we are in a couple of months we'll be, I think, one of the first players in India to be ready with a liquid cooled solution for solar applications on the BESS side. So given the head start and the technology adaptation which we have made, I think we have a very, very strong portfolio. On the industrial side also, we have NDA, so we cannot name our clients, but we have a very, very strong portfolio when it comes to the clients which we have on our portfolio. And beyond that also is just not that we are offering battery as a solution in terms of the service networks which we have set up, in terms of the softwares which we have built, which we provide to our clients as value additions with regard to diagnostic and other features in the battery side. So I think we are building a very strong ecosystem. We have a very strong head start, and then a huge advantage is that we have our own captive requirement as well with our own vehicles. So we expect the growth to remain very, very strong in the coming few years, and that is the reason we are also up another line in Indore itself, because we are already seeing that by the end of this year, our Bangalore line will be fully utilized.
Understood. So, just on the cell front, which we are probably importing, where are we importing it from?
So it's mainly from China and Korea right now, which we are importing ourselves.
Okay, understood. And how much of so given that this year we'll fully utilize our battery line in Bangalore, what would be the peak revenue from that, and how much are we planning to put additionally in Indore?
So Indore, we have, I think, exactly Indore, I would not know how much is, unfortunately, I don't have the capacity numbers with me offhand. We can share with you later. But I think by FY 27, we expect the battery business to be anything between 2 to 300 crores of business for us.
Okay, so in 2 years, like it's in 1.5 year time.
Sorry to
Yeah,
interrupt.
1.5 to 2 years, we expect it to be anything between 2 to 300 crore business for us.
Okay, and just one last question from mine. I know moderator.
Sorry to interrupt.
Yeah.
We requested to follow back in the queue for more questions. A request to all participants, anyone who wishes to ask a question, I would ask you to restrict your questions to 2 questions per participant. Our next question is from the line of Senthil Kumar from Joinder Capital Services Limited. Please go ahead. Senthil, sir? Okay. As the current participant is not responding, we'll move to the next participant. Sandeep Mukherjee from SKP Securities Limited. Please go ahead.
Yes, sir. Thanks for taking my question. Sir,
Sorry to interrupt, Sandeep, sir. Your voice is very low.
is it audible now?
Sir, your audio is low.
You're audible now, Sandeep.
Okay, sir. Please
So,
go ahead.
thanks for taking my question, sir. Sir, what can be the capex? What would be the capex for FY 26 and 27, sir? If you can bifurcate also.
So, very difficult to bifurcate, but as I've told you, between FY 26 and 27, overall, we'll be spending about 2,500 crores on the Odisha project. So just to give you a bifurcation like that, it's very difficult because, as I've told you, the project has already started. So it's an ongoing project.
So by FY
But besides, there is most of the other capex which we have already incurred. So we don't see any substantial capex beyond the Odisha project right now.
Okay. Okay, sir. Thank you.
Thank you. Our next question is from the line of Om Prakash from Infosys. Please go ahead.
Yeah. Hi, sir. Are there any plans for a KIP? Earlier I heard there was a 3,000 crore KIP. Is it still in plan or have it gone?
Could you please repeat your question? I could not understand.
Okay. Are you planning for any KIP now, or earlier I heard the news there is a 3,000 crore KIP. Is it still in place?
No, there's no plans. That was just a board approval which we had taken, but there is no plan in the foreseeable future.
Okay. Since you mentioned you have started the wheel set from July, can we see those numbers in the coming quarter results?
So the existing facility already the numbers are showing and those numbers will increase only quarter on quarter. But the Odisha project is going to be on stream by end of next year only. So before that you will not see the numbers coming out of that project.
Okay. Thank you.
This year we have given the guidelines from our Odisha business to be beyond, to be 500 crore plus the revenues, which will go up to about 1,000 crores next year.
Okay, next financial or next calendar year?
Prakash sir, we request you to rejoin the
Next financial year, it will be next financial year will be 1,000 crores from our existing facility, and this year it's going to be 500 crore plus.
Okay.
Thank you. Our next question is from the line of Akash from Dalal and Brocha. It's a follow-up question. Please go ahead.
Yeah. Sir, just trying to confirm the guidance for 27-28. I believe wagon revenue will continue to be there around 4,500 crore. Wheel sets, you are saying that by 27 it will be 1,000 crore, and by 28 when the new plant is on live, the Odisha plant capex is complete, I think it will be 2,000 or 3,000 crore, right? Full business?
Yes, between 2 to 3,000 crores depending upon the pricing, because it's too early to predict the pricing right now.
Correct. And the battery business, that is inclusive of all the ELCVs, that will again be 500 to 1,000 crore by FY28, right?
By FY28, we expect, yes, anything between 500 to 1,000 crores definitely.
Understood, sir. Just last two questions from my side. One is, sir, on the brake system, the brake business, what kind of margins will do? Because from the last several quarters, we are just reporting a loss from the JV and associate side. So hence I'm asking.
So see, on the brake disc business, there is no losses. We have already started showing positive margins, and I think by the end of the year, we expect very strong EBITDA margins on that business. As I have told you, the brake system business, unfortunately, the way we have got the orders, our real order supplies are going to only start from the last quarter. So from next year onwards, we are both on the Daco JV as well as Stone India, you are going to see very strong EBITDA margins in the next financial year. But unfortunately, the way the orders were structured in this financial year, you will not see strong margins from those businesses. But from next year, in terms of both revenues and margins, you will see very strong numbers happening. So all put together, between the brake disc and the brake business, I think from next financial year, it should be I'm expecting anything between 300 to 500 crores revenues coming out from that business.
Understood. And my last question on order book, sir. Basically, our order book we are seeing continuous decline on that front from 7,000 crore, let's say a year back, and now we are sitting below 6,000 crore. So how do we expect this to shape up, in the immediate and medium-term future?
So see, in terms of the private order books, it remains steady. The decline which you are seeing is because obviously railway, we are expecting the next big round of tenders. As soon as the next big round of tenders would come from the Indian Railways, you will see a substantial jump in terms of the order book. But if you see if you look at a private order book, that has been, I think, very, very steady, and that has been growing.
Okay, sir. That's it from my side. All the best, sir.
Thank you. Our next question is from the line of Pawan Roy, an individual investor. Please go ahead.
Good afternoon, sir. My question was on BESS side, sir. How do you see the revenues from BESS in next 2 years, sir?
So as I've already mentioned, I think we are very, very bullish on this segment. We have a advantage in terms of that I think we are the very few companies in India who have now developed their own systems. We have already this month we'll be supplying our first integrated BESS system. We'll start exports next month to the African market. So we expect it to be a very, very strong performer for us. Overall battery business, as I mentioned, that we expect in the next 2 years that would be at least a 300 crore business for us.
Okay. Thank you, sir.
Thank you. Our next question is from the line of Senthil Kumar from Joindra Capital Services Limited. Please go ahead. Senthil, sir, please go ahead. As the current participant is not responding, we'll move to the next participant. Next participant, it's a follow-up question, and it's from Rajesh Bhandari from Nakoda Engineers. Please go ahead.
थैंक यू सर फॉर गिविंग मी चांस अगेन। सर मेरा क्वेश्चन बैटरी पे है। आपने जैसे बताया कि आपने सीमेंस को भी बैटरी सप्लाई किया है फॉर देयर मेट्रो और फॉर देयर कार्स, तो इनफैक्ट सीमेंस को सप्लाई करना मीन्स इज रियली समथिंग ग्रेट। और रेलवे, दिस इज कनेक्टेड टू रेलवे, और रेलवे में तो सर बैटरी के इतने मतलब यूजेस हैं, तो आप और भी सोच रहे हैं कि रेलवेज को आपका बैटरी जो है दीज आर ऑल लिथियम बेस्ड?
So railway right now is using more of nickel cadmium के applications. वहाँ पर the demand is very huge application. So we are already working with the railways and we expect जैसे आपने कहा कि demand बहुत ज़्यादा है, so we are expecting railway अब काफ़ी specifications ला रहे हैं lithium ion के लिए भी. So next साल में हम expect कर रहे हैं कि railway का demand काफ़ी substantially बढ़ेगा. But जब तक वो numbers में नहीं translate होता है, we are not doing any kind of projections on that demand. Definitely we expect numbers to be much better in the next 2 years.
और कवच सिस्टम में अपना कोई आइडिया नहीं है सर? ये प्रोग्राम नहीं है आने का कवच सिस्टम में?
कवच में नहीं एज ऑफ नाउ, क्योंकि अभी ऑलरेडी हमने 2-3 बहुत बड़े प्रोजेक्ट्स लेके रखे हैं, स्पेशली ऑन द व्हील सेट और जो हमारी जो ईवी बिजनेस है, वहां पर हम एक्सपेक्ट कर रहे हैं काफी ग्रोथ अपॉर्चुनिटीज हमें दिख रहा है।
जी जी हमारा थैंक यू सर, थैंक यू सर, थैंक यू वेरी मच।
Thank you. Our next question is a follow-up question and it's from the line of Hardik Gandhi from HPMG Shares and Securities Limited. Please go ahead.
Hello, sir. Thank you for the opportunity again. Hope I'm audible. Just 2 questions from my end. The first one being that given that there is a bottleneck in the wheel supply for this year, at least there was in Q1. So how can we see it for the rest of the year? Are we seeing the normalization in there, and can we ramp up our production back to normalized levels, or what's your thoughts?
So already, as I have mentioned, that supplies have normalized to a large extent, and we expect it to improve further. So, and that is the reason in terms of the confidence that, for the coming quarter numbers. So, but going forward, whether there will be any disruption or not, again, very difficult for us to predict as of now. But we definitely supplies have normalized considerably, and as per our knowledge, it should improve going forward.
So are we expecting the year to end at approximately 3,500 crore this year, or a lower number than that?
For the wagon business, as I have mentioned, that if the supplies remain to be consistent, we expect to achieve our project targets. Maybe if there is a shortfall, it will not be very substantial, because in the last 2 quarters, we expect to make up some ground for the first quarter. But however, it again all depends on how on the supplies. However, the positive side is that we have a substantial private order book where we are not dependent upon Indian Railways. So there we don't see any challenge in terms of supplies.
Understood. And this, that since we are seeing so much traction in the BESS front, right? Why not go to a little more aggressive? 300 crore business. I'm from the landscape of renewable as well as clean energy and the amount of BESS required in the market right now. 300 is in 2 years time, doing a revenue of 300 is not meaningfully adding to the ecosystem as per my knowledge. So why not go more aggressive?
No, I understand we are very aggressive, but whenever you give numbers, you have to be very, very conservative. As I have told you, there is a huge opportunity which is there in the market. So it's not what I'm saying is in terms of the growth potential, it is very huge. But today it is very difficult for us to give very strong, which it would not be right on our part to give very strong guidance. So as and when how the market evolves and our order book evolves, then we can keep on changing the guidance. But are very, very aggressive on that segment. It's not that we are not aggressive. And we see a lot of opportunity, because today if you look at the best segment, it's 100% imported. And now with all major tenders which Indian government is floating, they are bringing in the Make in India component, as well as now with restrictions on net metering, as well as the entire energy demand equilibrium. There is no, people have to invest in battery storage. It is not possible for the solar ecosystem in India to sustain or grow without investment in the battery ecosystem.
But if you can just quantify it in the terms of capacity, I don't want revenue.
Request you to rejoin the queue for more questions. Our next question is from the line of Atif Shah, an individual investor. Please go ahead.
Hi, sir. Thanks for the opportunity. I had a question regarding our FY27 targets. I mean, I know it's too early to say, but you had mentioned possibly reaching a 10,000 crore top line. So I just wanted to understand, if you take out the ELCV part from it, because although we are bullish on it, it's a big question mark. What are we kind of looking at without the ELCV? Like, so for example, if you said 10,000 crores and you're expecting 2,000 crores from ELCV, for example, then that leaves us with 8. So for our core business, excluding the ELCV, what do we expect?
First of all, I have never projected 2,000 crores for ELCV. I'm talking about anything between 300 to 500 crores by FY28.
No, I was just giving an example. Sorry.
I don't mean a big gap in what you have. So ELCV is not going to be, and it's not only ELCV, it includes also the battery business. So that it's, in terms of that revenue numbers, it's not very significant if you look at the overall revenue numbers. And when I talk about, I've talked about 8,000 to 10,000 crores, I'm talking about FY28 once our Odisha plant comes online. So,
FY28.
Yes, I continue to maintain that guideline, because that business itself will add to anything between 2,000 to 3,000 crores in terms of top line revenue. So I'm very continue to maintain that guideline.
Understood. Okay, that's all, sir. That was the only question. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you. While we have started off FY26 with a few challenges, we are very confident of making up the shortfall through the rest of the year. With a strong foundation, strong order book, and a future-ready portfolio, we have multiple levers for growth. Our focus remains on scaling efficiency, innovating substantially, and delivering consistent value to all our stakeholders. Thank you for your continued trust and support. We look forward to updating you in the coming quarters. Thank you.
Thank you. On behalf of Systematic Group, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.